The average American worries about their finances for 4 hours a day. The most top three financial concerns I hear is, do I have enough money to cover my shelter? Some people, while less frequently, but it's a real painful issue, is can I cover groceries? And for other people, and this was actually the most common, is, am I going to be prepared for retirement? If those people are worried about their financial security in some capacity, that undertone ringing pain is coming to work and it's distracting them from being productive.
So, welcome, Mike, to the Profit First Australia and New Zealand podcast. Amazing to have you back on. The reason why we are having this chat today is because you have recently released your latest book,
Yeah.
The Money Habit, which we have a copy of here.
You got it. The first copy.
Yay! And I would love to know a little bit of a background. So, for those who are listening to the podcast, they will know you obviously as the creator and author of Profit First. And I'd love to know why the money habit, why now, and how does that fit into Profit First?
It's been something that I created for myself. The day I deployed Profit First for my own businesses, I was also cognizant I needed this system at home. And I want to say it goes almost 20 years. It's probably 17 or so years back that I started with this. It was imperfect, but it improved quickly because I realized how I was just working with how I naturally work. Well, fast forward, I always had in my mind that I needed to write the counterbalance for Profit First. Because if you nail the numbers in your business and you're profitable, but your finances at home are unwieldy, it leaches off the business and it can collapse the business. And the reverse is true too. I've seen people prepare for their personal future, reserve funds and save for retirement. And the business they start doesn't go on the financial trajectory they expected and it leaches off the business and takes it down. Like these two elements have to move in parallel. It's just like walking. If you have one bad leg, it doesn't mean you can walk as fast because you have another strong leg. Both have to be strong and healthy. Well, I got a call from a fellow who ran Profit First in his business. He was very successful. And he shared a dynamic I wasn't really thinking about. Yes, he wanted to also manage his personal finances. He kind of deployed Profit First at home. There's a chapter in the book called The Profit First Lifestyle. So he translated it. But what he said is his employees were worried about money. And there was this article that came in the US out maybe in mid 2025. And it said that financial worry for the vast majority of Americans, and I believe this to be global, but the vast majority of Americans has become a part-time job. And what they meant about it is that the average American worries about their finances for 4 hours a day. How am I going to pay this? Can I afford that? And so forth. And it can be a kind of a low, persistent, painful thought. Sometimes it's heightened when there's a transaction happening. I also believe this to be a global phenomenon. A lot of folks worry about money. And it's interesting in surveying individuals, not entrepreneurs alone, the most top three kind of financial concerns I hear is, do I have enough money to cover my shelter, which is my rent or my mortgage? Can I cover this every month comfortably? Some people, while less frequently, but it's a real painful issue, is can I cover groceries and food, like the absolute core essentials for survival? And for other people, and this was actually the most common, is, am I going to be prepared for retirement? That seems like the biggest worry is when I retire, I don't know if I'm gonna have enough money. Well, if you have a team, and listen, it can be employees, it can be vendors, it can be gig economy workers, contractors. If those people are worried about their financial security in some capacity, that undertone ringing pain is coming to work and it's distracting them from being productive. So I realized from this call I got, his name was Tommy, that his employees are bringing a challenge to work that's compromising their ability to do work. They're worried about
Mm.
money. And it becomes the entrepreneur's responsibility to cure this. Yeah, we can say, I wish it was taught in school or their parents. But the reality is the person paying the consequence is the person running the business. Because if I'm worried about money, I can't work as effectively. I can't be as focused. So the book took on a whole new perspective for me. I thought it was just the entrepreneur that needs this as a compliment. And I realized it's anyone that earns an income and has worry about finances that the money habit is a method to achieve financial independence for them, to alleviate that worry.
Mm. And I think that's a really good point with regards to the business owner. If your team members are coming to work and they are distracted because of their financial stress, they're not as productive. And that has a direct flow on to your business and your income. And then that has a direct flow on, and it just keeps trickling out. And so being able to help your employees have a clear idea of where they're at, where they want to be, is an absolute game changer. And here in Australia and New Zealand at the moment, our prices have started to skyrocket. So it was tight for many people before, and it's going to be even tighter. And it's a perfect timing for this. And so you mentioned that you started doing this 17 odd years ago at home. What was the first step that you implemented for yourself that gave you that peace of mind?
Well, it started off with a realization, and I think in many homes when there is or are partners, that often one person takes the lead. They're the financial person for home. They pay the bills. They make sure that everything is addressed financially. And in my house, it's myself. And so my wife would come to me and ask me if she could go out with some friends for lunch or something. Do we have the money for it? And it became this very peculiar parent-child relationship where I'd say, "Oh, I'm sorry, you can't," almost like shaming her for even asking. And conversely, at times I'd say, "Yeah, you absolutely can. Here's your lollipop," kind of feeling.
Mhm.
And it was uncomfortable for both of us. It would cause confusion at best, arguments at worst. The money habit, we deployed it initially as one account, and it was her account, basically her slush fund, if you will. And there was this realization that when her name's Krista, when Krista had this account, she didn't have to ask me. She had a debit card associated with it. She could log in. She could see all our money if she wanted to, but now she had one account specifically she could look at, and she knew the intentionality behind that money. Because
Mhm.
before, what was so confusing is there's a lump sum of money in my head or on spreadsheets, but honestly, mostly my head. I'm calculating where's money going. And Krista would come in and she'd log in and look, and she sees there's some money there. You think there's money to do what you want to do. And I'd have to assert control. Well, once we set this one account, she never asked me again. She's like, "Oh, I'm going out with friends," or "Not going to this time. We're going to spend some time together here. There's not enough money in the account." It became I call them clarity accounts. We had a very specific intentionality behind it. It was very clear if there was money available to do or not, and she now could make decisions independent of me. And that became this realization, like, "Oh, you know who could really benefit from this account? Not my wife, me." Because the biggest spender was me. Because I saw the money. I made the assumptions or conclusions of what the money is being used for, and then saw, oh, there's a little surplus here. Here's what I want to do. And yeah, it was maybe for the benefit of both of us, or other times it was my own selfish interest. But I was actually the one with the least control over money because I thought I had control over it, which was the greatest irony of all. And so then I set my account. And that's when I started realizing, oh, I need to be more in control of how I spend my money, the Mike Slash Fund. And that then inspired the whole system. That process happened over maybe a month or 2. It was very quick. Like, once I set one account, it was so helpful. And the best part, Katie, is no more confusion, no
Mhm.
more arguments. It was just clear. And
Mhm.
it's funny, it happens all the time. We just went out with friends this past weekend, and this is the most common one. It's just a quick text. My wife will say, "Hey, we're going out. Why don't we go to this other restaurant?" Which is this was a little more of a fancy restaurant. "And why don't we treat our friends because, they just did us a favor, and we wanted to give them a treat." And she goes, "The funds are there." If the funds weren't there, she may say, "Hey, why don't we go to a different restaurant, or why don't we delay this a couple weeks?" So we're making decisions as a team because the system's telling us what confines we have to work within.
Mhm. And I always talk about the rules of the game. And when you don't know the rules of the game, it's very stressful, it's very chaotic. And this is just giving some rules around what money is where, as you say, those clarity accounts. And we always joke in profit first, the more accounts, the better. It actually
Yeah.
makes it clearer. When everything's set up correctly, the more accounts you have, it's clearer. And this is exactly the same. So you had both of your own slush fund accounts, and then what came next?
Well, then the essential system came about, and we initially started off with clarity accounts th- you're correct. The more accounts, the more clarity to a point.
Mm.
So I'll give an extreme scenario. We didn't do this, but I started to get too nuanced. First, there was an entertainment account. And entertainment meant going out to dinner, subscriptions for television or seeing a play, something like that, going out together for some activity. And I said, wow, I should have an account specifically for subscriptions. And that did bring more clarity because subscriptions, I guess, see this kind of ru- routine drip of how we're spending money. And the other entertainment components, like going out to dinner, we had more influence over. It didn't happen the first of the month, every single month. Then I was like, oh, I can have a Netflix account, I can have an HBO account, whatever the primary ones are. There is a certain point it became overwhelming and too nuanced.
Mm.
For us right now, we have, I think, 15 accounts, but they fall within categories. The primary category, or I shouldn't say primary, but one of the categories is needs. So let me take it back. We have an income account. That's where money flows in.
Mm.
The reason we still have an income account is we never spend a dime from there, but it shows us inbound cash flow. It's funny, most people, including myself, log into their bank account at least weekly, but most people do it daily. I do it multiple times a day. I think I logged my bank account 3 times today just to check real quick or to do something or do a quick transaction. Every time I log in, the income account shows an inbound cash flow. And I can see now, so in tune to me because every time I log in, I see that has money or not. I know when the money's going to hit, typically based upon our payroll schedule, when we collect money. I know exactly the amount it's going to be. And so that income is what's going to be carved up, and it's important to see and understand that cash flow. But the next count is needs. Needs are the essentials for living, and we all need shelter. People do confuse this. I remember I was talking to a guy who says I need to pay my mortgages, and I was like, "Your mortgages?" Because yeah, I own 3 homes, and now that I have mortgages, I need to pay them. So need is not responsibility. Those are two different things. You're responsible to pay your mortgages. You don't need those. So need is the essential for living. We all need shelter, and it can be an apartment or a home. And yes, I understand even that can be expansive in our definition, but need is not responsible for. That's the distinguishing factor. It's essential for living. So food, utilities, shelter overhead, the essentials. Next is wants. Wants are for the mini luxuries, which is actually an absolute critical human element that we give ourselves reward. We live a life of deprivation, it often results in retaliation. It's
Mm.
like a diet. I'm not gonna eat anything except this. Well, do that for a month and you're pulling your hair out and you're like, I'm gonna eat every single cookie on this plan, damn it, because I deserve it. So we need to give ourselves that relief valve, the wants. Next is dreams. Those are the longer aspirational goals or achievements that we aspire to have. Maybe it's vacation, maybe it's something else of significance to you, but it's longer time. There's a thing called fix or future. Many people go into the money habit with debt. We're going to make that account called fix, and we're going to intentionally allocate money to eradicate debt, particularly unsecured debt, credit
Mm.
cards, stuff like that. Once debt is under control, we have authority over it, then we'll change to a future state. We're reserving for a degree of financial independence where the money we earn is covering our perpetual future, as opposed to dreams where we're intentionally spending. Now, money is designed to start earning money and support us in the lifestyle that we desire. It could be retirement. It could be using those funds in some other capacity, but that's the intentionality. And the last is emergencies. Emergencies are probably the most predictable bill you're going to have. The unpredicted bill is the most predictable. So we're going to reserve for that. Those are the essential accounts. But what we did is we did sub or clarity accounts. So I have a needs account specifically for the mortgage. We don't blend our mortgage payment in with our grocery bill. So we have an account that says needs, and then we have another sub account, if you will. It's actually just another bank account. They're all distinct bank accounts, but it says N dash mortgage, need, essential for our mortgage. And we're putting a lot of intentionality around that because our mortgage is almost paid off now. We've designed it in a way that we're moving through it at a very rapid speed. But my wife and I agreed that while maybe it doesn't make financial sense to pay off a mortgage where the interest rate's lower than what you can earn by investing it, it is for our heart and our comfort and security is essential
It's
for us.
important to you.
Yeah. So we've defined it that way. So we have these sub accounts. Collectively, we have about 15 accounts that we have.
And I think that's two important points there is that it's not about being stingy or too frugal or tight because that doesn't last. It's
Yeah.
giving yourself that money to spend on yourself, however you so choose. And then also that intention around you and Krista intend to get that mortgage paid off, and that's what's important to you. And then somebody else may not want to, and they just want to make minimum payments. That is
Exactly.
also okay. It's what do you want and what's going to work for you and your family. And there isn't one right, perfect way to do it. But it does mean taking some time to have a think about what do you want? Because
I
that
have a
4 hours of chatter that everyone has each day,
yeah.
I would guess that none of that is thinking about what would I like going forward? It's can I pay this when this bill coming in? What about what's happening here and so on? It's not spent on that future focused. What would it look like if we did this or that? So
Well,
that's
similar to Profit First, the money habit is a framework that is malleable for someone's intentionality. I had a dinner with a friend last night. Sadly, he lost his wife a month ago, who was a childhood friend of mine. And so we went out to dinner, and he said that in the last 5 years of his wife's life, they knew she had a terminal disease, that they're moving with intentionality to live life to their fullest, which was active travel and engagement with their kids. Um, so their mortgage, what the priority was for them was the absolute minimum payment on this mortgage because we don't even care about our house after 5 years from now. And
mm,
the danger of some financial systems is they say, here's the percentage you should be doing no matter what. This is the way you need to be living no matter what. In fact, there's some systems, for example, that say, make sure you're putting 10% of your income toward tithing. Tithing is important to some people, and to other people, it's not or not even relevant. And so then there's this question, am I doing something wrong? Or is the system not designed for me? We need a system that morphs to accommodate our definition of our lifestyle at that state. In fact, I have a concept called seasons. And in this book, to realize that there's financial seasons, and just like nature's seasons, you don't stay in one season forever. You rotate through. Different than outdoor seasons or nature seasons, they can ping pong around. And so you may be recovering from debt now, and then you may be into a phase where you're intentionally saving, or you're trying to strike this balance of living in the moment while also preparing for the future. But you may go back into a recovery season where you need to eradicate debt again. So we have to realize that we're going to roll through different seasons, and that's going to change our allocations too.
and that it's not wrong or right or good or bad. You're
Right.
It's what season you are in based on what you're going through and also what you want in the future. And unfortunately, as you say, those unexpected emergencies, statistically, something's going to happen to us or our family members. Like it's going to happen.
100%.
And I know people don't like to talk about this. And I always joke, prior to businesses, I was a financial planner that specialized in estate planning. So I'm very comfortable in talking to people about getting sick, injured, or passing away. And it's really important for me that people are aware of that is going to happen at some point. So let's plan for it. And if it doesn't happen, great. But if it does, at least we've got it covered. And having a framework in place for your personal funds now saves a whole lot of stress and energy and worry when that happens. Because when something blows up like that and then you try and get things in place, it's a whole lot extra stress. And so
I
with the
think,
seasons, oh, sorry, go ahead.
yeah. Well, I think denial and a blind eye are the worst financial management tools ever, and hope isn't much better. Like, I hope this doesn't happen. The best thing is to prepare for the unexpected. Yes, hope it doesn't happen. Should it, you've been prepared, and should it not, well, now you got extra cash on your hands.
Mm. And it doesn't have to be, I feel like humans will often, I can't do it perfectly, so I won't do anything at all. It's like, actually, we want the messy, like, try this framework. What season are
Yeah.
we? Okay, what are we doing? And at least have some momentum because something is better than nothing. But I think people, when they do use the money habit system, will realize that how simple it actually is. Just set it
Yeah.
up when you just take that time to work out what you want and work through it there.
It's radically simple, and you can get started with just one account, just like I did just with Krista's account, then subsequently mine. In fact, I would say that's the preferred method because there's so many systems out there, and like diets, most of them fail. Some are oriented toward this deprivation mindset we talked about already. Like you deprive yourself until you retaliate. It's funny. Some people, though, become addicted to the deprivation. That's far less frequent, but it's the Ebenezer Scrooge syndrome. And so then they earn the money and they never feel safe in utilizing the money. and they deprive themselves of opportunity. And that's pretty ugly because I've seen that too, albeit much rarer.
Mm.
So the key is, so if you have skepticism or don't know if it's going to work because of your experiences with other systems in the past, budgeting, spreadsheets, or other techniques, we start slow and let it grow. This is something we learn with Profit First. We have over 1.1 million deployments globally of businesses in the world doing Profit First. It is the most widely utilized financial or cash management tool in the world for small business. And we learned from these deployments, the businesses that went in hard and fast often failed. It was overwhelming. They had to adjust their business's lifestyle to accommodate these new numbers, and they often abandoned it. Well, we learned that with Profit First, just set up one account, your profit account, for example, and start preparing for that. And then quickly, but consistently over time, build, but only once you have confidence at that stage, the first stage, the setup. And so with the money habit, we found it's the exact same thing. We allow people to set up one account to address their biggest worry or wonder. So when I surveyed audiences and I hear that my biggest worry is retirement, or my biggest worry is the mortgage or groceries, whatever it may be, I invite the audience to set up one account. So let's just say it's retirement. At your bank, whatever bank you use, set up an additional account called retirement. And this is different from Profit First. Allocate the necessary percentage of your income to cover with confidence that mortgage every month or however frequently you pay it, and assure that's covered. And the magic of the system is this, that you'll start alleviating what's your biggest worry. You identify as your biggest worry, the concern that comes up most. You will know with 100% confidence, I am allocating accordingly to cover that. But that's not the magic. The magic is in what's left over, because you'll say, oh, I don't have as much money to go out to dinner or to do that subscription with Netflix or whatever. It forces a subconscious behavior of, I got to make sure I cover the mortgage, and I probably have money for this, to a conscious awareness of, if I'm to cover the mortgage, this is what's left over. And with conscious awareness comes control. With control comes financial independence.
And I think people also sometimes feel like that's got to be more mental energy because they're going to have less and then they're going to have to face that. And then what are they going to do? But in
Yeah.
fact, when it's clear how much they do actually have less, they then have a clear guide of where they're at and what the gap is, and then they can move to solutions rather than the 4 hours of constant what's happening. And that's one thing we find in Profit First. If you just get started, then you start to take back control
Yeah.
and just step by step by step.
Yeah.
So
Worry, I think, in this context is your mind actually still processing and saying, how am I going to do this? But because you don't have the information, it just kind of rings in the background saying, how am I going to do this? How am I going to do this? Once you have conscious awareness, the mind goes to the solution. Okay, this is my reality. I do have the mortgage covered by saying this one account. I don't have the ability to do so and so. Okay, because I can't, I won't. And this is how I'm going to still experience joy in my life, or use the remaining money I have in a different capacity. But once your mind can process it, it alleviates that ringing worry.
mm. And it's just you don't have the money for it yet. It's not to
That's
say
great,
that
and
you
that's the
can't
best point of all. It's
find
simply
it.
yet. Yeah.
It's I always joke with my clients who are generally in the trade space, the amount of them who have a insurance policy for a vehicle that they have sold quite some period of time ago. And I always use it as an example, and the tradie will like laugh and so on. And probably 1 in 5 will then come back to me and go, oh, guess what? I thought I cancelled that. And same with subscriptions. So you may not have the money left yet, but then that encourages you to look at what expenses you do have. And there's always going to be something, those quick fixes you can find, and realize that a subscription's been debited twice or whatever it may be. It doesn't have to be, as we say, that I can't spend anything. I'm now like a complete stingy, frugal type of person. And you tell a story about one of your clients and what the money habit did for their employees,
Yeah.
and how that, well, trickled. It was more than a trickle, and made a difference with their employees. Can you give us a little bit more around that to give the listeners, some of those business owners listening, to not only is it going to be useful for them, but also to be able to help
Yeah.
their
So that was a garage door service business. They had 900, they're a large garage door service company, 900 people, national deployment here in the US. And we started off with 25 people that volunteered to do this program. And they voiced the same concerns we just talked about now. Can I cover the mortgage? Is there enough for groceries? What was interesting was the immediate clarity it brought. So they set up the one account around their main thing and they saw what was available for other things. With clarity came control. I remember one of those individuals, we'll call her Deborah, that was not her real name. And Deborah said, I really enjoy going out to dinner. And she goes, once I assigned money to the biggest worry I had, which was her mortgage. She said, I don't have enough money to go out to dinner as frequently as I like. I like to go out at least once a week. And so then we said, well, how do you maintain that joy? Because if you feel you're depriving yourself, that results in resistance. We already talked about that. Deprivation often results in retaliation and resistance. So we said, how can we gamify this so it's actually more joyful only going out once a month? Because now we have cash clarity. That's all we're going to do. We do want to go out, but we're going to do it once a month. So what she did is she gamified this. She said, okay, if I go out, I'm going to go out at the end of the month, week 1 of the month, I'm going to do a study of 5 restaurants I want to go. I'm going to become a reviewer of restaurants is my goal. I'm going to identify the 5 restaurants. Week 2 is I'm going to prepare a blog post to a group of friends, and it's going to be 3 or 4 friends maybe, but and my family, and tell them, here's the restaurants I'm considering. What's the vote and where should I go? Week 3 is I'm going to do a dry run to this place, take some pictures, add it to my blog. And then week 4, I'm going to go. And then if there's a week 4.5 or 5, I'll do a debrief of it. Otherwise, that'll be part of week 1 when I start the process again. And now she became this like restaurant reviewer. She said, ironically, she gets more joy out of this process. And she's proud she's working within her money, what's available to her. The interesting thing is collectively, the group saved over a 6-month period, like hundreds of thousands of dollars. And these were not people making millions. They were making on average 50 or 60,000 US per year. So these are kind of the average income for a US earner. It's not big money. And they're able to make extraordinary change. It was remarkable what Clarity did. They also eradicated huge chunks of debt. I think the best part was this, is at the end of it, we did a retroactive study and said, what has been your income increases over the years? And they shared it in confidence. It was an anonymous survey. But we saw that most of them had achieved a consistent level of significant increases. Anything over 5% is considered significant. It was 10 to 15% on average for these people. They were big earners in raises. And yet their money management during that period of time showed that they were actually spending more aggressively as they earned more. They were actually getting deeper into the hole. Once they introduced the money habit, this is before they got an increase, again, they started putting control around it. We then followed up afterwards, after they got the next increase, and they started building this buffer, this gap. Their spend wasn't increasing the same rate. Now it's going towards savings, future planning, and other things. The greatest lesson is this, is that more money without financial control, financial authority, is actually to your detriment. You become unwieldy. But once you assert control over your income today, as you earn more in the future, it becomes expansive.
And that's the key thing, that if it isn't under control at 50,000, it's going to be further out of control at 60, at 100. It's just going to accelerate how out of control it is and do the exact opposite to what people hope it will do. And as you say, this framework works whether you are earning average wage, whether you're earning above or more, because the framework can be used irrelevant of where you are in that stage. It's about what you want and where you're headed.
Correct.
One final thought for our listeners, Mike. If you could impart one piece of knowledge or encouragement or advice to them,
Yeah.
what would that be?
It's kind of self-reflective. I was at an event 2 weeks ago, big audience, and one person said, I have a question. They said, profit first, the money habit. These are, quote, great systems. They said, but Mike, you're good with money. I suck with money, said the person about themselves. Why would the system work for me? And I said, I got to make a correction in the question. I'm not good with money. I suck with money. Like, I think the biggest misconception is, oh, because a guy wrote the book, he must be a good money manager. He must have some kind of accredited experience and knowledge. No, I'm not good with money. I proved it. I've blown my money. I'm good at identifying a system that becomes transformative and works with who I naturally am. And that's why now I look like I'm good with money. I still am my same human self, but the money management system I have is excellent. And therefore, I am now perceived as and feel excellent with money. It's not
Mm,
me, it's the system.
mm,
The key takeaway is this: you do not need to change yourself. You don't need to strengthen up your financial muscle or get some kind of unique education around managing money. You simply need to embrace who you naturally are, literally be more of yourself. So if you log into a bank account regularly, check how much money you have, that's great. This system is designed to sit there. If you don't know what to do with money or what's available for what purpose, and you're trying to do a budget, but you don't look there, that's awesome because we're not going to use budgets in some remote spreadsheets. If you think that there's some magical app out there and you've tried them and it doesn't work, fantastic, because the best app is your bank. That's where you're going already.
mm.
So the money habit works with who you are. And the takeaway is this: never try to change who you are. Try to channel who you are to get to where you want to be.
Awesome. Thank you very much, Mike.
Thank you.